We're jumping straight into Robinhood today. Everyone is watching the price action, but the real story is the transformation into a financial super app.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we dive in, just a quick reminder for everyone listening to subscribe and hit that like button. It really helps us keep bringing you these market simplifications every week.
It really does.
Okay, so it is January 31, 2026, and frankly, the numbers on the screen are hard to ignore. We're looking at a stock that is up roughly 230% in 2025 alone.
Yeah.
We're seeing highs over $150. I mean, it feels like everyone is talking about it again.
It does feel a bit like 2021 all over again in terms of the noise, doesn't
Yeah.
it? But you have to be, well, careful with that comparison.
Right.
When you see a chart go vertical up over 200% in a year, the instinct is to call it a bubble. People think, okay, the retail traders are bored, they're back on the app, and they're pumping the stock. But the data suggests something fundamentally different is happening this time. This isn't a meme rally. It looks like a structural repricing of the business.
That's a bold claim, because for a lot of people, myself included, it's hard to shake that image of the app with the digital confetti, right?
Oh, for sure.
You download it, you buy a few shares of whatever is trending, and that's it. But you're saying the engine under the hood has completely changed.
Completely.
Yeah.
And to see it, you just have to look at the third quarter of 2025. The headline number is that revenue hit $1.3 billion.
$1.3 billion.
That is a 100% increase year over year. They doubled the business in 12 months.
Okay, doubling revenue is impressive for a startup, but for a public company of this size, that's massive. But revenue is vanity, profit is sanity, right? Are they actually making money on this, or are they just burning cash to get there?
That is the most important part. Net income surged 271% to $556 million.
Wait, hold on. Walk me through that math. If revenue doubled up 100%, how does profit go up almost 300%? Shouldn't expenses have gone up too?
This is a textbook example of operating leverage, and it's the holy grail for software companies.
Okay.
Think of it this way. If you run a hotel and you want to double your revenue, you usually have to build another hotel. You need more land, more concrete, more staff to clean the rooms. Your costs go up alongside your revenue.
Right, it's heavy lifting.
Exactly. But Robinhood is software. They built the trading platform years ago. The code is written. The servers are running. Adding the next million users or processing the next $1 billion in volume costs them almost nothing in incremental expense.
Ah, I see.
So when revenue doubles, their costs stay relatively flat. That extra money doesn't get eaten up by expenses. It falls straight to the bottom line. That's why profit is growing 3 times faster than sales.
So they've reached that tipping point where every new dollar is almost
Pure margin. That explains the profitability explosion.
But let's dig into where that money is coming from. Because the old knock on Robinhood was that they were a one-trick pony. If people weren't trading dog coins or meme stocks, Robinhood starved. Is that still the case?
It is becoming less true by the day, and honestly, this diversification is the core of the bull case. We aren't just looking at transaction fees from people day trading stocks anymore.
Okay.
Robinhood now has 9 separate business lines that each generate over $100 million annually.
9. I mean, I can guess the big ones, options, crypto, stock trading, but getting to 9 seems like a stretch unless they've really broadened the menu.
They have. And the most strategic one, in my opinion, is the subscription revenue. They have nearly 4 million subscribers to their Gold service.
That's the monthly fee for lower margin rates and better data, right?
Correct. But think about what that does to the business model. Transaction fees are volatile. They go up and down with the market mood. Subscriptions are recurring. They are steady. It turns a portion of Robinhood into a SaaS, software as a service business, which investors love because it's predictable.
It smooths out the ride.
Exactly. And then you have the crypto side. Crypto revenue was up 300%, but the driver there is interesting. It's not just retail volume. It's the acquisition of Bitstamp.
I wanted to ask about that. Why buy an old school exchange like Bitstamp? Robinhood already had crypto trading. Was this just buying users?
It was about infrastructure and geography. Bitstamp gives them a global footprint instantly. Before this, Robinhood was very U.S.-centric.
Right.
Bitstamp has licenses across Europe and Asia. It allows Robinhood to stop being just an American app and start being a global crypto infrastructure play. It's a move toward institutional credibility, not just retail access.
Speaking of credibility, there's a number in the report that really jumped out at me. Net deposits were $20.4 billion in just the third quarter.
It's a staggering number.
I mean, to put that in perspective for everyone, $20 billion is bigger than the total deposits of a lot of regional banks. And that flooded in over just 90 days.
And remember, this is happening while traditional banks are fighting tooth and nail for deposits. This proves the network effect is real.
Okay.
They have captured the internet generation, millennials and Gen Z. These are people who opened accounts 5 years ago with $500. Now, they have jobs, they're inheriting money, they're building wealth.
And they aren't moving it to their dad's broker.
They're keeping it on Robinhood.
Because it's the ecosystem they know.
Hmm.
But there's a risk there, right? As those users get wealthier and more sophisticated, don't they usually graduate to platforms like Schwab or Fidelity or Interactive Brokers because they need better tools?
Yeah, that was the old way.
I know plenty of people who started on Robinhood and left because the charts were too basic.
That has historically been the biggest leak in their bucket, churn from high-value users. But look at the product velocity recently. They are plugging that hole aggressively. The launch of Robinhood Legend is a direct response to that.
That's the desktop platform.
Yes, it's a fully featured, customizable desktop trading environment. It's designed specifically so that the guy with $500,000 who wants to trade complex options doesn't have to leave.
Right.
If they can keep those graduating users, the lifetime value of their customer base explodes.
It stops the brain drain.
Precisely.
Yeah.
And then you add Robinhood Cortex, which
Yeah.
is their AI integration. It helps construct trades, analyze patterns. It's effectively democratizing the kind of advice you used to need a human broker for. They are trying to create a super app where you can save, trade, spend, and get advice all in one place.
So the thesis is they hook you young, and then they build the walls up so high with cool tools that you never want to leave.
That's the strategy.
Yeah.
And the smart money seems to believe it's working. Institutional ownership is sitting around 93%.
93%. Wait, I have to push back on that. Usually when we see institutional ownership that high, it sounds like a validation, but isn't it also a crowded trade?
It can be, yeah.
If something goes wrong, you don't just have retail panic selling. You have massive funds trying to fit through the exit door at the same time. Doesn't that make the stock more dangerous?
It absolutely adds to the volatility risk.
Yeah.
You are right. If the narrative breaks, the unwind would be brutal. But the flip side is that 93% ownership tells you that Wall Street has stopped viewing this as a gambling app for kids.
Okay.
You don't get to 93% unless pension funds, endowments, and major asset managers view you as a critical piece of financial infrastructure. It's a vote of confidence, even if it comes with liquidity risks.
Okay, so we've painted a pretty rosy picture here. Revenue doubling, sticky ecosystem, institutions piling in. But we are the Easy Money Show, and my job is to be the buzzkill. We have to look at the bear case.
Of course.
Because when I look at the valuation, my eyes start to water a little bit.
They should. It is not cheap.
Give us the damage.
Right now, depending on whose forward estimates you use, Robinhood is trading somewhere between 51 and 60 times earnings.
60 times.
For context, the legacy players they are trying to disrupt, the Schwabs, the banks, they usually trade at 10, 12, maybe 15 times earnings.
So you are paying 5 times more for $1 of Robinhood's profit than you are for $1 of Schwab's profit.
Yes, and that means the stock is priced for perfection. When you have a multiple of 60, the market is pricing in massive growth for years to come. If they report a quarter where revenue growth slows from 100% to, say, 30%, which is still good growth, the stock could get cut in half overnight. That is the danger of high expectations.
It leaves no room for error. And speaking of people who might think the price is getting a little rich, we saw some selling from the inside, didn't we?
We did. The chief legal officer, Daniel Gallagher, sold about $3.65 million worth of stock recently.
Near the all-time highs.
Right near the highs.
Yeah.
Now, to be fair, we have to note this was a 10b5-1 plan.
Which means it was scheduled in advance.
Right. It's an automatic sale plan set up months ago to avoid accusations of insider trading. So he didn't wake up yesterday, look at the chart, and hit sell.
Right.
But executives set up these plans when they think the stock will be at a price they're happy to sell at.
Exactly. It's not a panic sell, but it's certainly not a buy. It's a signal that he's happy to take chips off the table at these levels and just maybe the easy money has been made.
It definitely signals caution. And there's another structural risk we haven't touched on yet. We talked about diversification, but let's be honest about the revenue mix.
Yep.
Transaction-based revenues still make up about 55% of the total pie.
So despite the gold subscriptions and the net interest, more than half the business is still just people pressing buttons to buy and sell.
Yes, and that makes the business cyclical. Right now, in early 2026, we are in a bull market. Everyone is excited. Volume is high. But what happens if the market goes sideways for 6 months? What happens if we hit a recession and people stop opening the app?
The boredom risk.
Exactly. If volatility dies, Robinhood's revenue growth could hit a brick wall. They need action to make money. The legacy banks can survive on boring interest income. Robinhood still needs the casino to be busy, so to speak.
And we can't forget the regulators. They are always looming in the background.
Always.
Right.
There was a $2 million settlement regarding order routing recently. Financially, that's a speeding ticket for a company this size. But it's a reminder that their core revenue engine payment for order flow is controversial.
Right.
And now, by expanding into crypto with Bitstamp, they are widening their surface area for regulatory attacks. If the SEC or European regulators decide to crack down on crypto trading or payment for order flow, that hits the margins directly.
So we have a sky-high valuation, insiders taking some profits, and a business model that still relies heavily on market volatility. That's a real reality check.
It is. You're buying a high-performance Ferrari, but you're paying a Ferrari price. And you have to hope the road stays smooth.
So for the listener who is looking at this and trying to decide what to do, what are we watching in the next 30 days? What matters right now?
The immediate catalyst is earnings. Fourth quarter 2025 numbers are due in early February.
That's right on the corner.
Obviously, we want to see if they beat the earnings per share estimates. But I would tell listeners to ignore the headline beat and listen to the guidance.
The guidance, okay.
The market is pricing in 20% plus revenue growth continuing. If management hints that things are slowing down or that the super app adoption is stalling, the stock will react violently.
And look at the international story, right?
Definitely. Watch the integration of WonderFi.
That's the Canadian acquisition.
Yes, expected to close in the first half of this year. This is a test case. If they can successfully integrate WonderFi and grow in Canada, it proves they can do M&A correctly. If it's a mess, the whole global expansion story looks shaky.
And one more thing I keep hearing about prediction markets. It feels like the buzzword of the year.
It is the new frontier. Volume data there is projected to triple quarter over quarter. Robinhood is pushing into this space, letting people bet on election outcomes, economic data, events.
Right.
It fits their user base perfectly. It's high engagement, somewhat speculative, and high volume. If they can dominate that niche, it's a whole new revenue stream that the Schwabs and Fidelities of the world won't touch.
It really does seem like they are building a different beast.
They are.
Okay, let's look at the chart quickly for the technical analysts out there. We hit a high around 153. Where are the safety nets?
The narrative is bullish. We have a golden cross, which just means the moving averages are pointing up.
Right.
But if we get that earnings miss, or if volatility spikes, you need to watch the $100 to $120 range. That was resistance on the way up, so it should be support on the way down.
So $100 is the line in the sand. If it breaks that, look out below.
Exactly. As long as it holds above that, the long-term trend is intact.
All right, let's wrap this up. We've covered the financials, the products, the risks. What is the final verdict for our listeners?
The lowdown is this. Robinhood has pulled off a pivot that many people, including myself, honestly didn't think was possible. They went from the meme stock app to a legitimate, profitable financial powerhouse with $4.3 billion in cash on the balance sheet. They are real, but the price reflects that victory and then some. Being here at 150 requires you to believe that they won't just participate in the market, but that they will dominate the next generation of wealth. You are betting that the super app strategy wins the wallet share war completely.
You know, it leaves me with this question. With AI tools like Cortex making everyone feel like a genius and global reach via Bitstamp, are we watching Robinhood become the Amazon of finance? Or are the legacy giants just waiting for them to stumble so they can crush them on margins?
That is the multi-billion-dollar question. Can the old guard learn new tricks before the new guard gets too big to kill? We're about to find out.
We certainly are. That is all we have time for today on the Easy Money Show.
Thanks for listening.
Remember to do your own research, keep an eye on those earnings, and we will catch you on the next one. Don't forget to like and subscribe.